Very good morning, delegates. May I now request today's speaker, Venkatraman sir, to come and occupy the dais, please. Very good morning again. Welcome to today's workshop on recent developments in GST. Like the information technology field, the GST is also ever changing, and every now and then amendments keeps coming. So to keep ourselves updated and abreast of the changes in GST, workshop like this will help in sprucing and updating our knowledge. Even recently, Central Board of Indirect Taxes and Customs has released a concept paper on comprehensive changes in Form GST Authority, along with a draft Form GST Authority and instruction thereto in public domain for seeking suggestions of the stakeholders. GST and Indirect Taxes Committee of ICAI is in the process of compiling suggestions on draft Form GST Authority. The suggestions so compiled would be discussed and thereafter shall be submitted to the CBIC for due consideration. We request all of you to share your valuable suggestions of the draft Form GST Authority latest by 25th August 2022 by visiting iddc.ic.org website. Also requesting our members to disseminate this information with your peers and colleagues and join hands with the GST committee in supporting the government towards making a GST a good and a simple tax. Let's come to today's workshop. The agenda for today. We have 4 technical sessions, 2 in the morning and 2 in the afternoon. The entire morning session will be handled by Venkatraman sir on recent amendments in rate change and recent amendments in law and judgment. Post lunch, we have 2 technical sessions, decoding GST by M. Satya sir, Advocate Satya sir, and the last technical session on recent updates on notification and circulars other than rate change by Sharda madam. Before we move on, let us all raise for ICAI voters.
Sutteshu Jagrati Jayesha Sutteshu Jagrati Navam 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 Shalo Nirvimana Nirvimana Adeva Shukram Brahma Adeva Asmin Lokaha Sarve Tanuna Kali Krishna Devi Krishna Ketat Vaita Ketat Vaita Ketat Vaita Ketat Vaita.
Before we hear Venkatraman sir, it's our bound duty and privilege to honor today's speaker. May I now request CA Shubhta Ghosh to come forward and present a memento to Venkatraman sir. Over to Venkatraman sir.
Just a very good morning to one and all present here. As you would be aware, the topic that is allotted to me is recent trade changes and developments in GST law. So the agenda today is, first I will be dealing with the recent amendments to the rate notification. I will not be touching upon each and every amendment in the rate notification because that will take a lot of time firstly, and it's about explaining what the amendment is. So that is also as such available in the public domain and the other websites. So what I would be dealing with is the consequence of those amendments. I have picked up certain important amendments where there are gray areas, where there are points which require certain clarity. So those amendments I will be dealing with in the first part. Second, there were some clarifications, lots of clarifications which were issued recently. And I would not be touching upon each and every clarification. I will be touching upon only the clarification which is relevant to the GST rates. And in that, very specific clarifications wherein it will have an impact for various assessees, and then where you have some you would have what to say, like some gray areas or some areas which require even for further clarity, that I'll be touching upon in the clarifications and GST rates portion. And finally, for the second session, I've reserved the recent developments in GST law. So the major developments which we have seen as on date, very recent developments, and I will be touching upon those in the recent developments part. I will try to complete the first and second part, which is recent rate changes and clarification in GST rates, by 10:45, that is during the first session. If I have missed out on certain aspects, I'll use my second session, a portion of my second session for completing that, and then I'll be taking up the recent developments. So without any further delay, I'll just start off with my presentation. The first change is with respect to the renting of residential dwelling. Something which not many expected to come up, because this was an entry which was prevalent right from the service tax regime. Even under the service tax regime, you have this entry. When a residential dwelling is let out for a residential purpose, an exemption from taxes was granted. Under service tax, it was service tax. Under GST, it was GST. There was no issue regarding this. Like whoever rented a house or an apartment for residential purpose, be it an individual, be it a company for its employees, be it practicing chartered accountants, lawyers for their residential purposes and not for their office purposes, whosoever it was who rented a particular property for their residential purpose were eligible to claim exemption from GST. So things were going good. Then what had happened is, in the garb of taking the property on rent and using it for residential purposes, government noticed that there were people who were using those properties even for commercial purposes. You might rent out a property, you might rent out a residential building, but you might be carrying out your official work from there, which we usually do. Even this come work from home, we used to carry out our official work from our residential premises. Because earlier also, renting of residential dwelling for commercial purpose was subject to tax, both under service tax or GST. But how to find out whether it was for residential or commercial purpose? Very difficult unless someone comes and says to the department that it's being used for commercial purpose. Because nobody would be wanting to go the extra mile and then disclosing it with the department to say that I'm using this property for a commercial purpose rather than for a residential purpose. So the government felt the need to introduce an amendment to this entry. Earlier, the entry read as services by way of renting of residential dwelling for use as residence. That part of the entry still stays, just that the government has added an exception clause, except where the residential dwelling is rented to a registered person. Except where the residential dwelling is rented to a registered person. Now, if you are registered person means registered under the GST law. So that's how you will have to read the term registered. So now, if a particular person is registered under GST law, whether he is an individual, whether he is a partnership firm, whether he is a company, whether he is a trust, whether he is an LLP, whether he is an NGO or any person who is registered under GST law, whether he is using it for his residential purpose or for commercial purpose, exemption is not available. So this is the major change that has been brought out recently, which is going to affect many of the individual people who are registered under GST, like lawyers, doctors, practicing chartered accountants, and sole proprietorship companies, proprietorship concerns. All these people were hitherto carrying out their official work from their residential premises. Now they might have to think about paying GST, or they will have to think about how to restructure the transaction or continue paying GST. They start paying GST on the properties which they have rented it out for their either residential or commercial purposes. So this is a major change which has been brought about in the GST law. One thing is, it's better if you are advising your clients who are individuals, because today under the income tax you have a deduction for the rent paid under the Chapter 6A. You might, if the client is showing a reduction for the rent paid there and if he's not paying GST, if the GST in respect of it is not paid by him under reverse charge, which I'll be dealing with subsequently, then he might be under trouble, because now every portal is now linked. And information disclosed properly in one portal and not in other portal, you'll be caught. So while advising your clients, especially individuals or sole proprietorship concerns, if they are claiming for a reduction for rent under Chapter 6A of the Income Tax Act, make sure that on those rent which is claimed as deduction, GST is also paid. Otherwise, highlight that fact to the client, because on one end you might claim a deduction, on other end you don't want to pay tax. That will not be seen in a good light by the department or the revenue authorities. So now that exemption has been lifted, how the tax who has to pay the tax? Because in indirect tax there are two concepts. One is a forward charge mechanism, other is a reverse charge mechanism. Forward charge mechanism, as you will be aware, is a case where the supplier is paying the tax on his own account and will recover it from the customer or the recipient. Reverse charge is a case where the recipient will pay the tax and then claim credit of it. Now, to make things easier for the lessors or the people who give the property on rent, they said with respect to the residential dwelling rented out to registered persons, tax has to be paid under reverse charge mechanism by the registered person who has got the property on rent. So the lessor need not be worried about discharging GST on such profit, on the rental income. It has to be the registered person who has to pay the GST under reverse charge and subsequently claim credit of it. So it's better, as I already said, if your client or any of your clients who is a sole proprietorship concern who is claiming reduction for the rent under Chapter 6A, it's better to ensure that he also pays GST under reverse charge on the rent on which he has claimed reduction under Chapter 6A. So now this is the entry. What are the areas which are left unclarified, or that's where we require some more clarity? See, companies usually take guest houses, service apartments, hostels, etc. on rent or lease in their own names, or providing residence to their directors, second-order employees, etc. So now, earlier you had an exemption entry, which I'll be dealing with subsequently, where if there is a accommodation service where the value of tariff value is up to 1,000 rupees per day, then you need not pay GST. That entry has been removed. I'll deal with that subsequently. But now, now with this entry also got amended, and with the accommodation services entry also got amended. Now all the companies of taking guest houses, service apartments, etc. on rent, they will have to start paying GST under reverse charge. That's an important step towards, because they felt that these are all residential properties for use as residence. They tried to claim exemption. At least for guest houses and service apartments, they tried to characterize this as a residential property and not a commercial property, and they were claiming exemptions. But now, with the amendment which has been carried out, they might have to start paying tax under reverse charge. GST liability at 12% or 18%. This is what I was talking about. There is a separate entry under the accommodation services limit, which says if the value of accommodation or the tariff value is up to 7,500 per day, then you are eligible for a concessional rate of GST at the rate of 12%. Now, whether accommodation service is akin to renting of a residential dwelling for use as residence, because if both are akin, then why do you need a separate entry for taxing both? Because accommodation service, as the term suggests, is for specific purpose, that is for accommodating. Renting is usually for a larger period, and accommodation is for a shorter period. Like, you can differentiate those services. Renting is usually for, say, a period of up to 1 year. You don't take a specific accommodation on rent. You just say it is an accommodation service, and you go and book a service apartment. It's hardly for a very temporary period, shorter than a month's period or so. So whether those two services are indeed different, or can they be, seen in the same light, that's an area which we require clarity, or which that will have some interpretational issues there. Now, coming to ITC eligibility, there is a specific entry under the section 17(5) of the GST Act which deals with blocked credits. That says in respect of supplies which are used for personal consumption, ITC is not eligible. If you look at the sender credit rules under the erstwhile regime, it specifically said services which are used for personal consumption of the employee. So there the entry was even more clear. It said personal consumption for the employee. Say for example, you take an accommodation or a guest house on rent, and then for your purpose of employees, though a company could claim it is for their personal purpose, for their commercial purpose, since the entry in the rules stated that it's for the personal consumption of the employee, you are not eligible for the credit. Now here, under the GST law, the entry says goods and services used for personal consumption. So when a company takes a property on rent for the purposes of its employees, it is not, you don't say a company takes it for its personal consumption, because a company is for carrying out a business. It is for business purpose. On the other end, when a sole proprietorship concern or a sole proprietor takes a property on rent for his own use, residential use, then you can call it as for personal consumption. So how do you read personal consumption? It is for the assessee who is taking the property on rent, or will you see the ultimate person who is using that property? In case of employee, in case of a company, if the employee is using the property for his residence, can it still be treated as a service which is used for personal consumption and not a service which is used for business consumption? So where do you draw that line between a business use and a personal use? Now, this problem was always there under the GST law. It's not something which is new. But with respect to this amendment, again, this service is also now brought, is also now have to be, the eligibility with respect to this service has to be now be tested in the light of this restriction under the blocked credits. And now, if the company wants to now say, okay, fine, you said there is a change which has been brought out in the rate notification. Now, if it is a residential dwelling is given on rent to a registered person, then the registered person has to pay tax at a reverse charge.
Your opinion on the 25G,
which is on the personal consumption.
Yeah.
So if you ask me, I feel it has to be looked at the level of the person who is taking the property on rent, and not at the ultimate person who's enjoying that property, because if a company is taking that on rental, for what purpose the company is taking it on rent? Because you will have to test the eligibility in the hands of the company, and you're not testing the eligibility in the hands of the employee. That's how I see it. But there is a scope for argument, saying that since it's a well-settled law, that credit is a concession, it's a mercy which is granted to you by the government. Supreme Courts have held credit is a concession, and you cannot claim that as an absolute credit. Just because an indirect tax enactment envisages a credit mechanism to avoid the cascading effect of taxes, it might be the purpose of any indirect tax enactment to give you credit so that to avoid cascading effect of taxes. You can't go by the purpose of the act and then say that you read these provisions literally. Credit at any given point in time, is a mercy which is granted to you by the government. You can't claim that as a matter of an absolute right. Going by that logic, yes, it's a stretch to say that if the employee is using it for the personal consumption, I can deny the credit, but that interpretation is also possible. Tomorrow, the department can view that transaction in that light also, and then say that you are not eligible for the credit when I look at the ultimate use. But you can draw parallels. As I said, in Senbat merit rules, the entry was even more clearer. It says personal consumption of the employee. Here it did not say very clearly. So you can argue on those lines, try to argue. Again, department will have its own rebuttals to it, but reasonably read, and if you ask me, it's a reasonable view to take that companies will be eligible for credit and will not be hit by the restriction. But again, there is a scope for interpretation. If you want me to put in the shoes of the department and then make cases for it, I can make cases for how to restrict the credit. So interpretations are plausible, and equally you can also have a good case to contest that personal consumption has to be read at the level of the assessee who's receiving that service and not at the end use of that service. So that's about it. So two interpretations are equally possible. I feel on the restriction not being applicable, it's also an equally possible view, and if you can claim you can have a stand that restriction is not applicable for you.
List of the credit is that it satisfies the condition of in the course of further service.
So that is the primary condition.
So if you look at the provision of food to the factory employees, we had to fight at the level of Supreme Court to justify that this is required because under the Factories Act, the company is required to provide.
Correct.
Even though the department argued that it is for the personal consumption. But here, in the case of, as he says, in the case of provision of accommodation to the employees, definitely it is only for personal purpose. So I don't see any kind of in the course of furtherance of business in the hands of the employees.
See, if
you draw a parallel between the provision of food during the lunchtime at the factory premises and as required under the Factories Act, vis-a-vis the provision of accommodation to the employees, it seems to be a little far-fetched if we claim the credit.
like, yes, I get your point, because but for the mandate, see, you can always argue. The Factories Act says gives you an obligation. You are talking about factories. Take the example of corporate offices who are not even mandated by any law to provide food for their employees. But why do they provide food? It's like as a company or as a business person, I may choose to conduct business in the way. So, see, sir, I can say that these are all the additional benefits or purposes which I grant to my employees to make them come to me and then work for me in a better and efficient manner. So you can see the nexus to business can always be established. There is no, because see, if you take that point, if you say that it's not for the purpose of business, you can't claim even deduction for these expenditures under income tax law. Now, if you look at the parallel between GST law and income tax law, the nexus test with business is the common thread. If you take a stand that for the purpose of GST, it's not in the course of business, then you can't even claim deductions for these expenditures under income tax law, because under section 37, the first and primary condition for claiming deduction is the expenditure has to be for the purpose of business. Only and exclusively. So that nexus with business has been interpreted in a very wide manner, both in income tax law, and that principle you can equally put out. With respect to the condition of whether it's used in the course of furtherance of business, I feel there is not much scope for the department to argue that it's not for the purpose of business. At best, where they can argue, say that your credit is restricted is on the aspect of personal consumption. With respect to the nexus with business, always it is, because even under the central credit rules, you had prior to the exclusions which were explicitly brought in 2011, the word read as activities relating to business. That was interpreted in a very wide manner by the courts. So, nexus test with business can definitely be argued out. It's an easier thing to sail through. But when compared to personal consumption, there you might have a problem. So, in the nexus principle, excuse me, the department will not have a very good case to say that it's not for the purpose of business. But if you ask me on this point of personal consumption, yes, there is an issue, but we might have to fight it out. The last aspect which I was dealing with, if the companies feel that allows the employees to take the properties on rent on their own account and then merely reimburses the expenditure, can they avoid paying GST in the reverse touch? Because if the employee is taking the property on rent, employee will be an unregistered person, and only if he is going to use it for this residential purpose, then he can claim the exemption in terms of the exemption notification entry. And if the company merely reimburses it, then there would be no requirement for the companies to pay GST under reverse charge. But if the department sees this as transaction as a a mechanism to avoid paying tax or to circumvent the tax liability, because if that transaction is seen wholly and exclusively, this transaction has been adopted to circumvent the tax liability and then a mechanism to deliberately avoid paying tax, then the courts might not view this transaction as a proper right. Though legitimately, on a strict reading of the laws, it might be possible to say that companies need not pay tax. Whether the test of commercial prudence is satisfied. Did you commercially structure this transaction to to make the things easier for you on a commercial parlance, or did you structure this transaction solely with an intention to reduce your tax liability? Transactions which are solely structured with a view to reduce your tax liability without any commercial substance is not generally seen by courts in a proper light, though this as a principle has been brought out in the income tax law in the law itself. If you look at the general anti-avoidance rules which has been brought out in the income tax law, which says transactions which lack commercial substance will be taxed at a pretty higher rate. Though that principle as such is not ideally brought out as a law in the GST Act, but on the principles of equity, court might not view this transaction in a proper way. But yes, you can still argue on a strict reading, this might be possible, and then the companies can avoid or paying GST on these transactions. But again, you will be under the scrutiny of the income tax authorities.
Because legally, the employer is not a privy to the lease agreement with the landlord. The last one.
Yeah.
The employer is not a privy to the.
That's right. Usually the thing is, the employer takes the property on rent and gives it to the employee. There he is privy. But for this entry, you would have continued with this transaction. Because of this entry, you wanted to solely to avoid the tax liabilities, you wanted to restructure the transaction. That restructuring is without any commercial substance, if you ask me. Whether that will be seen in proper light by the revenue authorities, definitely not. Some courts might take a view that on a strict reading, you have just entered into a transaction and you have not technically violated any law. You have legally found out ways to enter into a transaction to avoid paying tax. That is possible. There is a difference between tax avoidance and tax evasion. You didn't intend to evade tax. You wanted to avoid tax in a way legally. If that is a principle that is equally being followed, and that's a principle that's also upheld by Supreme Court. Tax avoidance is not something which is illegal. If you structure your tax plannings, if you structure your business, structures in accordance with the legal framework to reduce a tax liability, that is an equally accepted way. But there are two schools of thought on it. Some judges feel that if there is no commercial substance in those transactions, ideally they will look into the substance of the transaction and then accordingly decide on the tax liabilities. Some judges feel you have just structured the transaction within the legal framework to reduce the tax liability. That is acceptable unless there is something which is glaringly prohibited. Unless there is a prohibition expressly under the law, you are allowed to do it. Under GST law, there is no express prohibition as on date. So if that is so, some courts might allow that structuring to be done.
What would be the better one, like the implement will be done between the employer and the landlord, or
See, if you ask me the better one, there is no single straitjacket answer to it, sir. It's about how best when the department comes to us for investigation or the revenue authorities come behind us for investigation, how better we put forth that case. It all boils down to that factor. You don't have a straitjacket answer. If you ask me what is the right answer, there is no single right answer when it comes to interpretation of laws, unless except in very few cases. If you ask me about the interpretation of entry, if it is given to an unregistered registered person, if tax is payable, there I can have a straitjacket answer, yes, tax is payable. If it is given to an unregistered person, tax is not payable, tax is not payable. In these straightforward cases, I can give you a straightforward answer that yes or no. But in these cases of interpretations, when both views are possible, you might have to, it boils down to how best you put your case and strengthen your case before the court of law and to the revenue authorities, and that is more important than what to say the actual legal principle, what is stated in the law. How better you structure your case and then put forth it before the authorities and the court and convince them. That plays an important role in deciding these cases.
both the cases as per the income tax will not be
Which cases, sir?
even if the agreement is between the employer and the landlord, or the agreement is between the employer and the employer and the landlord. Both the rent agreement cases, the rent expense, whether it can be claimed by
You can in both these cases, because in first case, excess test is directly satisfied.
in the second case.
Second case, if you structure your contract, if in the terms of the contract with your employee you say, because in many companies, if you look at it, sir, with respect to this telephone reimbursement, the company does not take the telephone connection in its name. It allows the employees to take the telephone connection in name, and then they put a clause in the employment agreement saying you'll be reimbursed for the telephone expenditure. So there the telephone, they will put it.
Exactly, that's what, instead of treating it as reimbursement, let them put it as other allowances. Get it
Then
tax
you
in
may-
terms of the employee. Get rid of this controversy under the GST. So that would be an ideal.
That's an ideal thing, but again, what is ideal?
Nobody is going to be afraid of it, because employee is relieved from the GST and the employee is liable to pay income tax.
Sorry, that's what I'm saying. Employer, as the law stands today, he might be relieved. But when it comes to investigation by the department, you might have to put forth it in a way that it convinces them. Again, when it is reimbursed to the employee, you might also have to check on taxation on perquisites in the hands of the employee. That's any case there, even in the case where the property is taken on rent by the company, but more so when you are making it as a reimbursement, you will have to make sure how it should be taxed as a perquisite and TDS on that under 192 of the Income Tax Act, how to be computed on that. That you will have to be very cautious of.
RCB is a final version. We take the RCB to avoid all the litigations. State level, what do you for most of the cases, they include the companies paying money, fully exhausting entities.
No, there is a restriction in taking. There is a restriction in taking breaks under RC.
Not planning like that. What kind of restriction?
No, he has told it.
No, when you see, that you can avoid. You take the guest house, clean the guest house, put the employment that we eligible for staying in.
So guest house is on a different scale. Compared to his life.
Same place. Amy, how many freelance village is staying in the same place? If you think you call it a guest house. It's not guest house, you can say just 10 days, 15 days.
These are like your point on pay tax and pay credit is the easiest option which the companies can choose. But again, one thing about reverse charges, sir, you might have to shell out your cash upfront.
But most of the cases, everybody's exploiting.
It's not about the exploit. No.
After rent is going to be very small outgoing.
So
So when we, in lakhs and lakhs.
But again, it's about you are talking about big corporates. For them, it might be an expenditure which you may not be worried too much. If you look at MSMEs or somewhere, and if you are going to pay commercial rents, on these guest houses, service apartments, they'll be charging rents at commercial rates, including the electricity rates. So to shell out cash upfront, it will be a working capital block because that credit will be offset at a later point in time. And second thing, yes, that's the best option. Personal consumption also, you have a case to say that it's not for personal consumption, but again, which is the easier battle if you ask me? Pay tax, claim credit, and then fight for the credit. That's the easier battle, and compared to not pay tax and then avoid this thing. That's the easiest battle.
Yeah, then we charge you interest and everything if you can go.
Same way with the credit, sir. Same way with the credit. If you are going to utilize the credit, you will be charged for interest. See, some point of time, it's like, again, it's better the government comes up with a clarification because in these kinds of transactions, you don't want to play with the interpretations and then fight out. These are regular day transactions, and the associates don't want to spend their time fighting out for their benefits in these transactions. There are transactions where associates want to fight out, but these transactions they don't want to waste their time fighting out. It's better the government comes up with a clarification, says at least put rest to certain aspects so that they can, if pay tax and claim credit is an option, let them say it out open by giving out a proper clarification so that the matter is settled for once and for all. It's better they structure that in the way. So now the other related amendment with respect to this ranking is this hotel accommodation which you were saying. Left hand side is what the earlier entry said. Right hand side is going to be the amendment. Earlier, if the services supplied by a hotel, guest house, club, campsite, etc. for residential and lodging purposes, where the supply was less than or equal to 100,000 rupees per day, it was completely exempt from GST. This exemption has been withdrawn now. Now, these services will be taxed at a consistent rate of 12% because where the value of tariff value is up to 7,500, you have an option to pay tax at 12%, and where the tariff value is above 7,500, the tax rate is 18%. Now this exemption stands withdrawn. Now take a case where you go on a tour and then you take an accommodation service. You are an unregistered person. Can they claim the exemption under the entry relevant for residential dwelling purpose? Because a service by way of renting a residential dwelling for residential purpose is still exempt if it is provided to an unregistered person. It is taxable only if it is provided to a registered person. Now say if you go on a tour and then you take a guest house and you take a service apartment for stay purposes, can that service apartment or a guest house claim exemption under the other entry of residential dwelling? This is the conflict which I was talking about. This conflict was always there. It's not something which is new. It's not arising because of this amendment. Even because this amendment, this conflict was there. Because how do you see accommodation service vis-a-vis a renting service? Because accommodation service is like, to give an analogy, you book an Ola or Uber for going to a particular place from one point to another. That is a transportation service. But you take the Uber on rent and then you choose to go to where you want it. Which place you decide that. You get an Uber rental on a package and you decide where to go. That's a rental service. In both cases, at the end of the day, what you do is travel. In one case, it is characterized as a transportation service because you don't get to choose to how to use the car. That's a transportation service. In the other case, it's a renting. The car is at your disposal. You get to choose where to travel. Similarly, is there that kind of a difference between an accommodation service and a renting service? So it's better the government comes up with a clarification because again, these are cases where the government accommodation people who run hotels or guest houses, they don't want to fight out on these aspects because this is their bread and butter. This is their day on day out transactions they're going to carry. They don't want to say I'll claim this exemption and then wait for the department authorities and then fight out for their benefits. Because if they start doing it, they might have to fight for their whole lifetime. In the course of the lifetime of their business enterprise. So it's better a proper clarification in this regard is brought out by the government here. On a safer aspect, it's better to treat it as an accommodation service and then charge GST at 12% because you have two specific entries and two specific entries are for a reason. And as I already said, accommodation is for a very specific, very temporary period or for a very specific purpose. You go there only for the purpose of stay. In renting, you get to choose how to use the house. You might have further restrictions, but renting is for usually for a larger period, say up to 1 year or so. And you have the option to keep renewing those rental agreements. But accommodation is not something like you keep renewing, you take an accommodation for a year or so. It's largely unseen in a regular commercial or parlance.
Accommodation up to 12%.
12%. Input tax credit. So the next thing which I will be dealing with is with respect to a tour operator service. So this is with respect to an Indian tour operator. Earlier, when an Indian tour operator is providing a service to a foreign tourist, okay, when a foreigner wants to come to India and then he wants to visit some places in India, and when there is tour operators like Thomas Cook or SOTC offers a package for them, a part of the service would be rendered abroad, and part of the service would be rendered in India. With respect to sightseeing, etc., that would be rendered in India. With respect to accommodation, booking, coordinating with the person's foreign tourist abroad, he might have some agent there. He might provide some services there. These are performance-based services, and these are broadly taxed. These are mainly taxed based on where the services are performed. And in a case where services are performed both in India and abroad, as per the place of supply rules which are prevailing as on date, it has to be taxed entirely in India, irrespective of where, irrespective of even if the proportion of services is rendered abroad. Even for one day you perform that service in India, the entire service gets taxed in India. But now, the government has brought in a breather for these transactions. They say, if the service is performed partly in India and partly outside India, especially a tour operator service provided to a foreign tourist, you have to be very specific. This is to a foreign tourist and not for an Indian tourist. Then, consideration, which is proportionate to the number of days which is spent outside India. Out of 5 days in a tour, 2 days you spend outside India. 2 by 5, 2/5 of the consideration will be attributable to the services performed outside India, and you will not be subject to tax on that service. So here, it's consideration proportionate to the number of days spent outside India, or 50% of the consideration, whichever is lower. Assuming you spend 4/5 of the days outside, that might be higher, but your maximum exemption is restricted to 50%. So, if the more in cases where most of the tour which is done in India, or which is in cases where most of the tour is done outside India, then you might be eligible only for the 50% exemption and not for the actual number of days which is spent. Now coming to GTA services. So GTA services is just a favorable amendment. Earlier, GTA services was liable tax at 5% under RCM without input tax credit. That option continues. You still have the option to pay GST under RCM. If the GTAs wanted to pay tax under forward charge, earlier the only option available to them was only to pay tax at 12% and claim after claiming ITC. Now they are now given an option: either pay GST at 5% without ITC or at 12% with ITC under forward charge. Earlier, the only option for GST to pay under forward charge was 12% after claiming input tax credit. Now, you have the option to pay GST at 12% with ITC or 5% without ITC. And this option has to be done by submitting a form called Annexure 5. And that has to be done by on or before 15th of the March of preceding financial year. Say, for example, let's leave out this year for 23-24. That option has to be exercised before 15th March with 2022. For the current financial year, it has to be exercised before 16th August 2022.
GST operators,
GT operators.
The GT operator. What about the service?
Sorry, sir?
Service recipient, what about service? RCA.
Sir,
You get a 5% and pay.
that's what it. So if operators choose to pay under forward charge, he need not pay under reverse charge. But if the operators feel they don't want to pay the forward charge, then you will have to pay the reverse charge under 5% and claim credit. That 5% GST under RCM, that is still there.
And that is for, sorry, right? If it's for transportation of passengers, more than 13%.
Yeah, that is there. This GTA means it's only for goods transportations. That is different.
Oh, sorry.
So these exemption entries have been withdrawn in GTA services, where the consideration charge for transportation of goods on a consignment transported in a single carriage, if the consignment value does not exceed 1500, or consideration charge for transportation of all such goods from a single consignee does not exceed 750. So these exemption entries have been withdrawn now. Now coming to
Even if the amount is 500 rupees, still they have to pay an RCA.
RCM or forward charge, that you will have to decide. These exemption entries have been withdrawn. I don't know the reason for withdrawing these exemptions. Why will you pay under forward charge, sir? He will ask you to pay it under reverse charge. These GT operators don't. The main purpose of bringing GT under the ambit of reverse charge is to ensure that tax on those services is collected. Because none of the transport operators were willing to get themselves registered under service tax or under the Australian law under the GST for paying taxes.
What we used to do is, we used to go on I'm on the road. The number of LCVs will pass. We just put the number, and then we start preparing invoices. The exemption has been withdrawn.
Yeah, that's there. It's a pretty much again because there are many cases falling under these exemption entries. Rental services, goods carriage. So now earlier, where passenger rental services with operators where cost of fuel is included in the consideration charge, there was a concession rate of 12%. Now this concession rate has been extended even for rental services of goods carriage, where the cost of fuel is included. This concessional rate earlier, which was extended available only for passenger carriage, is now available for even for goods carriage. The next important of the kind of an amendment which we never expected to come or which we never even contemplated of. Room rent services by clinical establishments. These are up until July 2017, up till July 2017. If you go to a hospital and then you get a bill from the hospital, it will have multiple components. The charges for the the hospital services, which is the clinic, the actual operation, what they have done for actual doctor services. You will have the room rents component, you will have the food component, and you will have the cost of consumables which are being used and other medicines which are being given to you. All these will be bundled in one particular cost. But if the one principal service would be a service of clinical establishment providing you a healthcare service. That is a principal service. The healthcare service will always be there. GST law recognizes the concept of composite supply, which says if two or more supplies are bundled together, and if you can identify one principal supply which constitutes its essential character, then the entire bundle will be given the treatment of the essential character. In a healthcare service, the essential character is healthcare. You don't go to a hospital for getting to stay in the rooms offered by the hospital or have the food in your.
Unless you are validation.
Yes. Let's talk about the usual scenarios. So you don't go to the hospital for staying there or having food there, etc. You go to a hospital for healthcare service. So what can any and every service provided by a hospital or medical establishment, healthcare services was exempt, so any and every service was exempt. Now what they are doing is, if the room rent, if there is a room rent which is given, if the hospital charges you for the room which you stay there, and if the room rent exceeds 5,000 rupees per day, on the room rent charges, pay tax at 5% without rent. See, the law on one hand treats a particular transaction as a composite supply and says this supply is characterized as a healthcare service. But a notification on the other end says that no, you might classify this as a healthcare service, but pay tax on the room rent component at 5%. Whether that is legally permissible or not, I will deal with it when I deal the recent developments part of this session today, because I will deal it along with ocean freight judgment in the case of Earth Minerals. You can have that connect there. Let's park that question for a moment aside. Let's deal with the other issues now. Now the entry says you will have to pay tax at 5% without claiming credits on the room rent charges where the charges exceed 5,000 rupees per day. If you look at the entries are in the 17.5 block credits, it says healthcare services are a blocked credit. Okay. Many corporates and insurance companies avail these services, because insurance company, why they avail these services? Because they charge you premium and they will have to compensate you. So when you have an insurance claim, the contract to avail these services will be with the insurance company and not with the person who has made the claim. So insurance company will have a contract with the hospital and the hospital will be raising an invoice on the insurance company. Now, if you characterize this service as a healthcare service, insurance companies will not be eligible for the credit, or for that matter, corporates will not be eligible for the credit because healthcare services is specifically blocked. But if you are paying tax, treating it as a room rent, and you have artificially split the transaction to treat that as a room rent, you have created a deeming fiction. Let's say you have created a deeming fiction. Whether the deeming fiction is constitutionally valid, whether that can be challenged before a court of law, we'll deal with it later, as I said. Assuming that deeming fiction is valid, because right now it is not struck down, it is not challenged, it is valid as on later. Now, how do you tax it? Any and every person who's any and every clinical establishment is raising an invoice, they will say it is an invoice for room rent. Now, if you carry the deeming fiction to the logical end, what you have received is a service of room rent. It's no longer a healthcare service. So, with respect to the component of GST charge and room rent, you should be ideally eligible for the credit. But here again, what the department will try to contend is what you have received. It's a composite supply of healthcare service. The essential character is healthcare. Since that service is blocked specifically, you are not eligible for the credit. That would be the point of contention by the department. But as an SSC, what we should have in mind is, normally if you tell me that's a healthcare service, I accept it. But now the rate notification which has been brought about by the government artificially dissects the transaction, splits the transaction which is naturally bundled otherwise, and separately gives a color to this service as a room rent service. When by an artificial mechanism, the government has decided to treat this as a room rent service, carry that artificial treatment to its logical end. Even for the purpose of availment of credit, treat it as a room rent service and see whether it is specifically blocked. Since room rent is not specifically blocked, you should be ideally available for the credit. That's how we'll have to start making a case before the department. So this is an issue because on one hand you might have to sell out GST, on the other hand you might also lose out on credits. So that is something which will have to be wary of, because the department on one hand will ask you to pay tax, ask the clinical establishments to pay tax, and on the other hand will also try to deny the credit in the hands of insurance companies and corporates to say that it's a healthcare service which is specifically blocked. So this is something which you will have to be cautious of while dealing with your clients. So there may be cases. Next issue is there may be cases where the patients are charged on per bed basis. If you look at a general ward, you don't get the entire ward for you. You are charged on per bed basis. So whether this 5,000 per day has to be seen for the general ward as a whole, or for the charges towards that bed which is charged for you. Because when you get a room, because there you don't get a room for yourself. What you get is only a bed. So when you get a bed for yourself, whether that is a room bed, because in a general ward you don't get a room for yourself. Only in special wards you get a room for yourself. So is the rate notification intending to tax only in the cases where a patient is allocated a special room for himself, only in those cases will this notification get attracted, or even in cases where you go in for a general ward facility, will this notification be attracted? There is no clarity on that aspect. So next important amendment with respect to goods, I'm done with services, I'll just move on to goods amendment. Prepackaged goods. So you would have seen memes circling the social media, the viral tweets going in the social media, like curd price has increased, buttermilk prices have increased. So debates in the Lok Sabha. So like earlier, all these items, curd, buttermilk, other food products like this atta, the regular provisions you get, these were subject to GST only if it is branded. And you had a specific definition for a brand name. Brand name means you should be able to establish a connection between that product. If you go and ask for say for a Cadbury's, you'll be given only a dairy milk. Similarly, if you go and ask for a Colgate, you'll be given a toothpaste because Colgate is recognized with that brand. So similarly, if that kind of connection is established, sometimes the company name itself can be a brand name. There's a huge amount of dispute there also. Can the name of the company itself be treated as a brand name or not? There are judgments on both sides. So there were lots of issues surrounding the brand name. Sometimes it may so happen that the products may not be as such ascribed a brand name, but they may be sold in a in the store, which has a brand name for itself. Like if you go to a gold, or if you go and purchase items like gold, they'll be sold that jewelry shop will be having a specific name for themselves. That jewelry shop will have a brand name for themselves. There were decisions to hold that even if a shop which is known for a particular product, and if that shop as such its name is creating a brand in the market, then whatever items which are sold in that shop will also be treated as branded goods. Brand name need not be always ascribed to the goods, need not be as such imprinted on the goods. Even these kinds of other ancillary factors which indicate a force of connection in the trade between the product and the consumer, then this will be treated as a brand name. So there were lots of issues surrounding this brand name. So the government felt, okay, let's try to not distinguish between branded and unbranded when it comes to rate notification. I'll say if your product is packed in accordance with the legal metrology rules, then you will have to pay GST at the specified rates. I think it's 5% predominantly. If your product is sold in loose quantities, without any labelings, without any markings, then it is exempted. If your product is packed, having the requisite declarations under the legal metrology rules. So under the Legal Metrology Act, pre-packed and labeled means the product is always sold, intended for sale in the packed form. Like in a specific quantity, because that's already packed, it is sold in a very packaged form. See, if you go to a grocery store, usually if you want to get things like atta, suji, etc., that will always be in packed form. Specific quantity, you ask for 500 grams, there will be a 500 grams packet. You ask for a 1 kilo packet, there will be a 1 kilo packet. Similarly, sugars like paddy sugar, you have a specific pre-packed quantity. Sometimes take a product like rice, that will usually be given to you in loose. So packed commodity is something which is sold in a very packed form. The product is always sold in a packed form, and that package will have a predetermined quantity, 500 grams, 250 grams, 1 kilo or so for that matter. So since it is sold in a packed form, the customer cannot test that product at the time of buying. So that's why the Legal Metrology Act requires certain declarations to be carried out. Who's the name of the manufacturer, packer, manufacturing date, expiry date, what are the ingredients used in the product, how to use, and the directions for use, etc. Those are declarations which have to be ascribed in line with the Legal Metrology Act. And there is a packaged commodity rules which has been introduced, which is there under the Legal Metrology Act. Those packed commodities will have to satisfy those. So unless if your product is packed and labeled, and it is required for labeling and packing and have to contain the necessary declarations as per the packaged commodity rules, then your applicable rate of GST would be 5% usually, or such other rate. Otherwise, if it is sold in loose quantities, to put it colloquially or to put it simply, where it is not required to be tagged and labeled as per the Legal Metrology Act, then you will be eligible to claim exemption from GST. So what do you mean by pre-packed and labeled as per the legal metrology act? That's what I said. If your product is intended for retail sale in the form in which it is packed, and if that package has a predetermined commodity, that is called as pre-packed and labeled. Now let's take an example of a same product, like which is purchased. Take an example of a product like Coke. Coke is sold both to retail customers like that in a packed commodity. Like if you go for a 750 ml of Coke, that is a pre-packed commodity. It will have all the ingredients and it will have all the declarations mentioned as per the Legal Metrology Act and the package commodity rules. But Coke is not just purchased by people like us, in consumers. It will be purchased like other institutional customers, say like the flight operators, the bar owners. When they purchase, they don't intend on selling the Coke to the customer or giving the Coke to the customer in the same package form. They will give it to you only in loose. In flight, you will be given a cup. Or when you go to a bar, when you go to a restaurant, you will be given a glass of Coke. It is not a predetermined quantity. They intend to sell it on loose. So when Hindustan Coca-Cola, when they sell
Through vending machine. Through vending machine.
Yeah. So anything for that matter. Or cinema outlets, they give it through vending machine. So when Hindustan Coca-Cola wishes to sell these their item, which is Coke, to these institutional customers, yes, while selling those items to these institutional customers, they will specifically mark on that product not for retail sale. That is an important declaration to be made as per the Legal Metrology Act, as per the package commodity rules, while selling it to the institutional customers. And that is a declaration which is required as per the law. Whether that declaration is also a declaration as envisaged, because the notification says it should be pre-packed and labeled as per the Legal Metrology Act. That Coke will also be pre-packed. That Coke which is sold by Hindustan Coca-Cola to these institutional customers will also be pre-packed. That will also have a predetermined quantity. And that will also contain a declaration not for retail sale. Retail sale is also a declaration. Whether that will come in your way of charging a higher GST on those products. So that is one of the issues which came. What about wholesale packages and packages having more than 25 kilograms, like with more than 25 kg or 25 liters? Because for those packages, declarations was not even required. There was a clarification or an FAQ which was immediately released by CBSE with respect to sales to institutional or industrial customers. They said those are not required as per, those do not require any declarations as per Rule 6, because if you look at the package commodity rules, which is which has been introduced, which is there under the aegis of the Legal Metrology Act, that will have a separate rule for Rule 6 that will provide for the declarations to be specified on every retail package. For sales to institutional and industrial customers, Rule 6 declarations is not applicable. So when a particular product is sold in a pre-packed form to industrial and institutional customers, that will be exempt from GST. Similarly, pre-packed commodity of 25 kgs or 25 liters or more, the declarations as per the Legal Metrology Act do not apply. So again, that will be exempt from GST. And there could be a case where your product could be a pre-packed commodity, but as a manufacturer, as a packer, as a dealer, you chose not to pack it as per the Legal Metrology Act. That's a violation under the LM Act. That will not give you an exemption under GST. You are required to pack it as per the LM Act. You didn't pack it for some reason or the other. You violated the LM Act. Violation under the LM Act cannot confer you a benefit under the GST law. You will have to still pay GST at the applicable rate. Sometimes what will happen is your retailer will purchase the commodity in packed form, but he might choose to give it in loose quantities to the customer. That they say, with regard to the purchase paid by the retailer from the manufacturer, there it will be treated as a pre-packed commodity, you will have to pay GST. When it is sold to the end customer, since it is sold in loose form, you can claim exemption. But if you look at the way Legal Metrology Act is worded, pre-packed commodity is defined in a way which says it is intended for sale to the customer in pre-packed form. That's when all the declarations, etc., will be applicable. When the retailer is ultimately going to sell, and that is known at the time of inception itself in loose quantities, then the declarations will not even apply in the first place. You can still claim exemption to the entire supply chain. So when this clarification is like this, it creates an issue there. Even for cases where it is identified at the inception itself, the retailer is going to sell rice, for example. Rice in most cases will be sold in only loose form. It is not it cannot be a pre-packed commodity requiring declarations under the requiring warranty declaration under LM Act. When that be the case, ideally exemptions should be eligible right from the start of the supply chain. But this clarification does not suggest to me that suggests a different thing. It says only at the last leg of the supply chain you will be eligible for the exemption. So again, whatever is beneficial, you can try to claim benefit of it. Other things you will have to go and argue it out, or you will have to fight for it. This is an important amendment because earlier what was the differentiation was either branded or unbranded. Now the differentiation is pre-packed and not pre-packed. So with this, I conclude my first part of the agendas for today's session, which is on rate changes. The next aspect is clarification on GST rates that we'll finish off in the second part quickly, and then we'll go to the recent developments.
We can now break for tea and reassemble by 11:20. Before we proceed further, we have with us Sikasa